In this video, I will be teaching you a golden trading strategy that you can use to make endless profits in the market. This strategy is so simple that it can transform any loser into a profitable trader in minutes, and so good that you will begin to wish that you knew this strategy earlier. I'm going to be breaking down everything in a way that even a beginner trader can understand. All you need is one candle and the ability to follow the rules that guides this strategy. This trading strategy is going to change your life for the better and make you a profitable trader fast. If only you watch this video to the end and never skip any part of the video. If you skip over any part of this video, this strategy will not work for you. Everything is connected together. And now, before we get into all of that, do well to like this video and subscribe to our channel if you're encountering us for the first time. Now, my tribe soldiers, let's get down into this business. By now, many of you must have been familiar with the concept of a top-down analysis, although we are going to do a little bit of what looks like a quick top-down analysis here. But this strategy is not about top-down analysis. This strategy is about getting a good level in the market, where price is sure to reverse to, and gain the interest of the big buyers or sellers in the market, thereby giving us a large profit size. Earlier, I told you all that our strategy is going to be mostly or solely based on one candle, and this candle is the most important part of this strategy. But for this to work, we are going to be adding some extra details or information to help smoothen it and make this strategy easier to understand and very profitable. Follow me carefully with this so you don't miss out on important messages in between. Our strategy begins with a single candlestick, and this candle is adopted from the 4-hour time frame, meaning that this candle is the summary of everything that price did during the 4-hour time period on the chart. Now, why is this 4-hour candle important for a day trading strategy like this one? The 4-hour candle is important because it gives us a solid level in the market that will be very important when we zoom down to the lower time frames. The high and the low of the 4-hour candle gives us valid support and resistance levels that we can use to identify areas of strong price movements on the lower time frames. These levels are very important. But not only that, the 4-hour candle marks the open and the close of the major trading sessions in the market, such as the New York sessions, the London sessions, Tokyo sessions, and the rest. These sessions are so strong that they create a major impact on trading volume and volatility across different financial markets, including the Forex market, the crypto market, stocks, and the rest. A combination of these levels with the trading sessions creates a powerful combination that makes the 4-hour time frame candle very unique from the other time frames candlesticks, making each 4-hour candle that shows up in the market very important, and that makes it the most crucial part of our trading strategy. Everything else is going to be relying upon it. It is the foundation on which we are building this day trading strategy. So now, instead of you looking for support and resistance levels aimlessly on the lower time frames and drawing them out from areas that price have forgotten a long time ago, the 4-hour candle gives you the current levels that are currently strong and active in the market. After drawing out the high and the low of the previous 4-hour candle, the next thing we do is that we zoom down to the 15 minutes time frame. Here we want to see what the market normally do around the support and resistance levels, those behavioral patterns around them. And if you don't know these patterns or how to trade support and resistance level before now, and you want to educate yourself on support and resistance strategies, you can watch my full course video on support and resistance to help you on that. Now, if you already have a little knowledge on support and resistance, you will know that one of the best and clear strategy on support and resistance is the flip support and resistance strategy. This is the point where the market breaks a support or a resistance level and then retraces to it before moving up to the target direction. You will see this happen almost every day on your chart. This behavior on the chart is the pathway to a blessed wealth in trading, if only you know how to trade it properly. The problem is that many traders know this strategy, but they don't know how to trade it properly. And that is why we have many losers in the financial market. Everyone claims to know everything, but when it comes to implementing it, it becomes a problem. But it is only in that implementation and making profit with all the things that you claim to know that we separate the sheep from the goat. A professional trader is a trader that makes profits. It is never about a trader that knows everything. Now, when you are on the 15 minutes time frame, you want to see the price break out of the 4 hours high or low, which now represent the support and resistance levels. So now, we can say that we want to see the price break out of either the support or the resistant level. So let's imagine that price broke out from the resistance level. At this point, what we want is for the price to move a bit high from the resistance breakout point. And then we wait for a retracement to the resistance level. This resistance level, which is now acting as our support, if it makes a small retracement move like this one, we will not take it. We want something clear, something we can work with, something that we can easily see and identify efficiently in the market. And when you get that clear retracement, believe me, you're almost there. You have come very close to the finish line. But there's also some few extra steps required for you to get to the trophy. The trophy here are those massive profits that you want to take from the market. So when the market retraces to the new flip support level, one more thing is needed, and that is the entry signal. Although the 4-hour candle is very important in this strategy, but without this entry signal everything will be of no use. This entry signal will give us the go-ahead to enter the market, thereby making us profitable. But before we get to the entry signal, let me tell you all about our mentorship program. In our mentorship program, I will be teaching you my personal high-level trading strategy that I use every day on the chart. This is not one of those mentorship classes where a trader will only come to talk to students and teach them theories. In our mentorship program, everything is based on intense practical for 2 months, happening one-on-one with me, live. Picture an online class where you will be learning a very powerful trading strategy from one of the best traders in the game, and at the same time, getting daily analysis, chart explanations, and signals for 2 months, beginning from the first day that you registered. That is exactly what you will get in our mentorship program and more. To join us, click on the first link in the description box below. Now, back to our entry signal. The entry signal that we are going to be using for this strategy is the engulfing candlestick, the perfect candlestick pattern for the job. With our bullish targets, we are aiming to see a bullish momentum candle when the market retraces to the zone, and for a bearish target, we are expecting the market to provide a bearish engulfing candle, and then we can take our trade from there. Now, let's see some examples of this trade at work on the chart. Now, in this example, the first thing we do is to draw out the 4-hour candles high and low. Now, I know you may be asking, Trading Chief, which 4-hour candle is the one that you're going to be drawing out for the day? Honestly, you can draw out your 4-hour candle from any of your favorite trading sessions of the day. But for me, I like to draw out the first 4-hour candle for the day, marking the beginning of the day, and then I can monitor it to see if I can see a breakout, and then the complete trading setup on that asset for the day, just before the end of the day. So when you draw out the 4-hour candles high and low, you zoom down to the 15 minutes time frame, and then you will expect the market to break out from the support or the resistance level, and then retrace to it. And in this example, see that there was a breakout to the upside. The market broke the resistance level and moved up. And from there, the market returned to the broken resistance level, which now becomes support, in order to gain power to push the market forward. And when the market touched that level, as you can see on the chart, the market then formed a bullish engulfing candle, which will now give us a go-ahead to enter the market. And when you see a great signal like this, you place your stop loss below the engulfing candle, and you'll take profit target at the next high, if there is, and if there is no close high. You can place the take profit target at least 3 to 4 times the size of your stop loss, and right here, we all can see that this trade was a successful trade. The take profit target was hit successfully. Now, let's take a look at another example. So first of all, we draw out the 4-hour candle, and like I said earlier, I draw out the first 4-hour candle of the day to make my analysis, and after that, the next step is to zoom down to the 15 minutes time frame. On the 15 minutes time frame here, we can see that the market broke the low of the 4-hour candle, thereby breaking the support level. And after it broke the support level, you can see that price moved down and then returned to the support line, which is now acting as the resistance level. And when it returned, you can see that something spectacular happened here. The market formed a bearish engulfing candle, and from there the market started going down. If you were present in the market, at the point where this bearish engulfing candle formed on the chart, you could take the trade placing your stop loss above the bearish engulfing candle, and your take profit targets are the next low or at least 3 to 4 times the size of your stop loss. And right here, you can see that the trade was successful. But does that mean that price will always show up like this every day on every asset you are trading? Of course not. The chart is not all sunshines and rainbows. Sometimes setups can be hard to find, especially on currency pairs, where almost all the assets move alike. That's why I like trading Deriv synthetic indices, because they all move in different directions, giving different trading setups daily. Deriv synthetic indices are assets that are only provided by one broker in the market, which is Deriv. You can only find these assets on Deriv. You can find the broker's link in the description box below to sign up with them and start trading these assets. In the next video that will appear on your screen right now, I will be teaching you a day trading strategy for beginners who are starting with zero experience. This video is a must-watch for everyone who is just starting up and seeking a beginner-friendly trading strategy, just like this one. See you there, my tribe soldiers.